When it comes to saving money and taxes, making the S-Corp election is by far one of my favorite strategies. However, I have seen so many hair professionals get this wrong and it ends up costing them more than it saves them in taxes. So in this video, I'm going to walk you through what changes in your business after you make the election. So let's get started.
You're not just a hair professional, you're a CEO.
Hey guys, it's Jen here with the Hair CEO, helping you build a premium brand focused on profits without overpaying in taxes. On this channel, I bring you videos on business and taxes tailored specifically to the self-employed hair professional and beauty business owners. So if you're new here, consider subscribing. All right, let's talk about how business changes for you after you make that election. And one thing to note here, I want to be very clear on this. Unless you have a letter stating that, yes, we have granted you this S-Corp election, then you need to assume that you do not have it and continue operating and file your taxes as if you did not have the S-Corporation until you get a letter from the IRS telling you that the S-Corporation's election has been granted to you. I've worked with some hair professionals and they'll tell me, oh yeah, I'm an S-Corp. And I'll say, okay, can you show me the letter? Because there's important information on that letter that I need to file taxes. And so they'll tell me, oh, I never got a letter. Or they'll be like, what letter are you talking about? And I'm just like, how do you know you're an S-Corp then? And I'll give them the phone number to call the IRS. And 9 times out of 10, what they find out is that they're not taxed as an S-Corp. They are not. They do not have the election. So I'm curious. I'm just like, why are people out here thinking that they're taxed as an S-Corp when in reality they are not? I do not know how that happens, but it happens. So let's talk about some of the things that need to change in your business once you have this election. How many things do I have here? 7 things. So let's take them one by one. The first thing that I say is that bookkeeping is no longer optional. And the reason I say that is because when you are an S-Corp, you have to file a separate business tax return. And so now you have to make sure that you are keeping really good records on what are your business expenses. Yes, this is important if you have an LLC and it's not taxed as an S-Corp, or even if you are a sole proprietor. Keeping your records are important, but even more so when you're taxed as an S-Corp, because it's all that more important with that separate business return. So that is the number one thing that has to change. The second thing that has to change is that separate bank accounts are no longer optional. I recommend this for sole proprietors and someone who has an LLC, but definitely if you have an S corporation. Again, for the exact same reasons, you have to keep meticulous records and you want to make sure that your business income is not mixed with your personal income. Another reason that we're going to get to is that because you have to put yourself on payroll and you want to make sure that your business bank account is separate so that when you set up payroll, you actually have a different account to transfer the money into. So really important there. The third thing is, and I just alluded to it, is that what must change is that you have to put yourself on payroll. And you can't just say, oh yeah, I'm going to pay myself $10,000. No, you have to pay yourself a reasonable salary. And the government is very particular about this because, of course, the S-Corp is there to help you save money, but the IRS doesn't want you to abuse this. So they're monitoring how much you pay yourself. And so it has to be reasonable. The fourth thing that has to change is that you now have to pay employment taxes as you run payroll. So if you're taxed as a sole proprietor, then you know that you're making estimated tax payments. I have another video about estimated tax payments that I will link, but when you are taxed as a sole proprietor, then you're required to make estimated tax payments if you're going to owe over $1,000 for the year. Well, once you put yourself on payroll, those estimated taxes are being taken out every single time you run payroll. So for example, I have some clients that I work with at the Hair CEO group where they run payroll every week, whether it's just for them or running payroll for their commission barbers and stylists. So if they run payroll weekly, then every week those estimated taxes are being taken out of that payroll for themselves and for their employees. The fifth thing is that you have to file additional tax forms. I alluded to this, but when you are taxed as an S-Corp, now your business has a separate tax return that it has to file. And if you are operating on a calendar year, this tax return is due by March 15th every year. And so this is something that changes that you're not used to. So most people who are taxed as sole proprietors are just used to that one tax return, and that's due April 15th, and it includes their business information. Well, now you're responsible for two tax returns, one for your business and one for you personally. The sixth thing that changes is you split your income into salary, reasonable salary, and then the other portion in a distribution. Now, this confuses a lot of people. So let's take an example. So let's say you have $120,000 coming into your barbershop or hair salon, and you had $20,000 in expenses. That would leave you with $100,000 as net income. Now, with that net income, depending on how much you take as a reasonable salary, and it has to be reasonable based on where you're located. So let's say you're in a place where a reasonable salary for you is $40,000. Well, you would take that $40,000 as a reasonable salary, however often you run payroll, and then you would take a distribution of the $60,000. So $40,000 in payroll, $60,000 in distributions. And distributions could be paying yourself, every week, every month, every quarter, every year. It's really up to you, but you could take that distribution, and you take that distribution by writing yourself a check, transferring a Zelle to yourself, but it's not on payroll. So what number was that? That was the sixth thing that you have to do. The seventh thing that changes is that you save on self-employment taxes. Now, this is what a lot of people talk about when they say S-Corps are the best way to save money, because let's go back to our example of $120,000 in gross revenue for your business. And then you have $20,000 in expenses. That leaves you with $100,000 of net profit. Well, if you're taxed as a sole proprietor, meaning either you have an LLC, a default one, or you don't have an LLC at all, then you are going to pay $15,300 in self-employment taxes off the break. So that is self-employment tax right there. But in our example for the S corporation, who's living in a place where they could take $40,000 in salary, and then it would be $60,000 in distributions. So you would only pay that 15.3% on the $40,000. And it's still 15.3%, but it's split up differently. Half of it would be paid by you, the employee, and then the other half would be paid by you, the employee owner. So it still ends up being 15.3%, but it's just that you're paying 15.3% on $40,000 instead of $100,000. So that's where that savings comes in. So those are the things that change when the IRS grants you that S-Corp election. Hopefully you've learned a lot from this video, and now it is time for the question of the day. Now that you know what you know about S-Corps, are you ready to make the election? Let me know in the comments. I am really curious as to who's ready to make this election. And if you are one of those who are ready to make that S-Corp election, please, 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 I look forward to talking to you on a clarity call so we can get you all set up. Now, if you're thinking to yourself, Jennifer, I'm not ready to make a phone call. I'm not ready to, talk to anybody live. I just want to see if I'm ready for this S-Corp election. I invite you to take the free assessment that I have. I'm going to leave the link to the free assessment, and it will ask you a few questions, and it will spit out whether or not you are ready for a S-Corp election. If you have found this video helpful and you want to see more videos like this where I simplify business and taxes, please consider subscribing, and I will see you next time.